Okay, coming to Christy now, that what is your outlook on equity? How do you see the index valuations versus how our portfolios are positioned as of now? If you can just throw some light on that,
Yeah.
it will help
Sure.
sector.
Sure. Actually, we sort of turned positive on equities, in the last few months, given the extent of correction that we have had across sort of market caps, particularly in the broader markets, and upside potential, which is a very important metric because it just tells you where your portfolio could be 2 year out, just depending on the various metrics that we see play out. It is sort of looking up. And that gives us a lot more confidence because most of this is driven by earnings. And you see, FY26 was a bad year for earnings. Now, what was sort of headwind that you have in majority of these sectors in FY26 is going to turn to a tailwind moving next year. And even for the next couple of years, things might look up in earnings. So when you have those earnings, which were sort of missing in the past 1.5 years that you've had in various indices, plus favorable valuations. Now, mind you, favorable valuations is not across the board. So you have to be very selective. So what comes to our mind is something like financials within banks, to a certain extent, IT services, some bit in insurance. So these are the pockets where there is a valuation, let's say versus its long-term averages and what we see for the quality of companies, there is enough comfort. So combination of these things should hold, the markets well. Now, looking at indices, large cap to our mind is relatively fine if we, were to exclude certain select companies. Small cap at this point in time looks attractive, not as a whole pack, but selective, being extremely selective. And we did touch upon our last, webinar, how that is going to play. Mid cap is that segment where we are not still very comfortable. And so the risk, we highlighted was something within the capital markets play, if you remember last time. And we don't need a major reason for the sell-off to happen. You just saw what happened to, some of the exchanges, to some of these broking entities, where they are assuming the current level of activity for the next 10 years. And you're extrapolating that in valuations. That is the chief concern. And that is why we sort of stay away from some of these themes. So that mid cap to our minds looks a bit more expensive.
Valuations are justified by increasing the time period or horizon that we are seeing, and probably that may not be as secular as a play as opposed to what the markets are pricing.
Right.
And the problem with mid cap is also that universe is so small, right? 150, and they are sitting at about 3-4 lakh crore of AUM, all chasing that 150 stocks, and that is leading to that impact, and that is why it's not corrected as much as small caps have. So I think small caps probably look much better or attractive from a valuation standpoint, at least in many of the pockets that we see. And large caps were relatively any which ways better at valuation.
So in small cap, the good part of small cap is that the universe is so large. So basically, you can buy anything below 250. And as long as it's liquid and good, well governed, you pretty much have a very large universe.
True.
And the chances of getting mispricing is much, much more in that.
Absolutely. And many stocks have corrected, right? The price and time correction, where earnings have inched up maybe single digits kind of thing, but it has gone up. At the same time, stocks have corrected by 20, 30, 40, or even 50% in many cases. So I think that is leading to better opportunities come our way. And I think we are looking at so many stocks closer to our buy limits. So it's a matter of days where we will have much more new names in the portfolio.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.